Vincenzo's Go Crypto Investing, where you like, subscribe, and most importantly, hit that bell notification for all your breaking news, coin updates, blockchain technology, and information and laws and regulations as we head into the cashless society, as I'm being repeatedly censored and suppressed by the powers that be that are trying to restrict this information. So it's very important to push us through the YouTube algorithm. Hit that like button, comment down below, hit the bell notification, and share this channel far and wide to stay up to date on all the breaking news. Hot off the presses after the Fed meeting in the last 2 days, they have raised interest rates 0.75 basis points. And you can see here in their summary, the Federal Opens Market Committee was held the 20th and 21st, and they've made projections to go out as far as 2022 to 2025 on the overall projections of the most likely outcome for real gross domestic product growth, the unemployment rate, and inflation for each year from, as mentioned, 2022 to 2025. And over the longer run, right, each participant's projections were based on information available at the time of the meeting. The longer run projections represent each participant's assessment of the value to which each variable would be expected to cover over the time under appropriate monetary policy and its absence of further shock to the economy. Appropriate monetary policy is defined as the future path of policy that each participant deems the most likely to foster outcomes for economic activity and inflation that best satisfies his or her individual interpretations of the statutory mandate to promote maximum employment and price stability, right? These people have been horrible at forecasting what inflation was going to do because they seem to have a misunderstanding of where inflation comes, or they just outright lie about where inflation comes when they blame greedy businessmen, when in fact the Federal Reserve and the money printing and the artificially low interest rates and the monetization of all government debt is the very term and is inflation. Expanding the money supply is inflation, and that's what the Federal Reserve with their rigged economy, when they want to stifle money and take it out of the system, they jack up rates and they cut the spigots off. But when they want to stimulate everything, they artificially suppress interest rates and they put a fiasco, helicopter amounts of money out into the economy and out into the banking system to be borrowed and lend and borrowed and spent, and without actual production being put into the economy for the money that is being created, thus causing prices to rise, right? Because when you expand the money supply, that's inflation, right? And the effect of the expansion of the money supply is the cost of goods and services that you need on a daily basis go up, right? Because the currency expanded. And then you can go down further into all their figures and see how they're expecting real GDP from 2022 to 2025 over the longer run, median central tendencies and range of economic projections. They're expecting it to level off and slowly maybe come up a little bit over the next couple of years. Unemployment rate, they're expecting it to stay pretty level, neutral to level, with slight variances up and down around 4 to 5% maybe. PC inflation, they're expecting it to drastically come down and peak in 2022 and then almost get cut in half in 2023 and then get cut in a quarter again in 2024. Core PCE inflation, they're expecting it to really come down over the next couple of years, just like the PCE inflation, and we'll just have to see about that. But this is very interesting. You can read the Fed minutes right here that they just released in the PDF, or you can wait till 2:30 when Jerome Powell starts to talk, and that's when the markets are going to start to go highly volatile, which I'm sure they already are based on that coming out. And usually right now, the markets would crash, the dollar would go up like it is, the stock market would go down like it is, and the cryptos would crash initially like they are. And then as the Fed talks, usually these prices start to go back up, but you can see the highly volatile swing. It's a very hard time to short and long this because the price is so volatile. Look at that big candle whip, and usually it does this, and then the Fed talks, and wherever it buries out, all the overall markets start to come back up again. And if we zoom into the 1 hour time frame, you can see we actually see this. Look at this big whip slash. What I would be looking at right now when the Fed comes out and talks in a few minutes in Bitcoin is how you interact where you're at now 19,310. Can you hold this critical level? And if you just violently whip slap in here, but you hold that lower level from 1 to the local bottoms, you could bounce back up into your first upper resistance of 21,740, and then some more major upper resistance as you get up near the 26 to 29,000 just south of that blue resistance zone. If you can't hold that local bottom, you're going to come down to 16,598, where you need to try to get some buyers to come in, or you would come down towards the top part of that orange resistance box. You can see Ethereum has had that violent whip slap too, but what I would look for in Ethereum is you need to hold this local bottom right here on this blue support zone, or you would fall immediately down to the $1,080 level, and your major upper resistance on the top side is $1,494, and then $1,769.76 in that red resistance box, or the volume indicator, is your key levels to watch. And to stay bullish, you want to stay above the top part of this blue support zone, right about where that low bottomed out there. You want to hold that, or you would trade down here very, very quickly. If we look at XRP, you can see it's had a big volatile move in a day. And from when it topped out up here the other day, it's come down now a few percent. And what you're looking for, like we talked about yesterday in XRP, is for it to hold. Where's that price label? For it to hold this 37-cent level right here, the critical blue line that it's been on support and resistance for quite some time. On this consolidation, this is your key level. You need to hold this 37 cents, because if you break it and then get below the 200-day moving average, that's almost right on top of the 37 cents in the hour time frame you can see down there. Your next level to fall down would be the 32 cents, and then 29 cents as your last level to stay above the major traded area and red support resistance box, which is the volume indicator, because if you dip below that, it's going to bring in this target that we've had out here for quite some time at 18 to 22 cents that we made the prediction last year. And that's what I would watch out for in the XRP. You need to hold this 37 cents if you want to try to get a pump as the Fed starts to talk in his press conference today after his interest rate hike. That 37 cents is your major area. If you hold that, you can make a run up to 50 cents in that blue resistance box. If you fail this 37 cents, you're coming back down to 32 cents. And unfortunately, that would be where that price moves to. If we go into here and look at dappt, let's see what it's been doing after it came down. Oh, dappt had a huge pump again. Look at that. See that? It got, the last time we talked yesterday, this thing moves like a son of a bitch. The last time we talked, it was down here and said that if it gets down near this point, a bunch of 493, that would be a spot to buy. It pumped just above that in this old consolidation there and came right up through that upper resistance. And now what I would see what this does is just see the trend. If it comes back down now, as it's trying to flip this red area into support now, if it came down to the 200-day or the top part of this red support zone, that might be a time maybe you play it and try to play it to the next level up, as this thing is essentially trying to flip this red resistance box that used to be major resistance back here that we talked about for quite some time. It's now attempting to flip it. You can see all the times it got rejected right in there. See that? Once, twice, 3 times. Right there and right there again. Now it's attempting to flip that from major resistance to major support. If it can come back down and hold right here, you could play another pump up to the upside, and that's what it's looking like there. And then a little bit of REVAIN coin. You can see it hasn't done anything. It's still sitting down at this major support level, but it is now making a new local double bottom. And if it can hold that local double bottom, you could try to trade up towards major upper resistance in a descending fashion up here. But if you slip this critical area, you're likely to come right down to there. Like, subscribe, and share. Peace and love.